Morning, everyone. It is Monday, December 9th, 9:15 a.m. Eastern. Good morning, YouTube. Good morning, Discord. We're live. It's another wonderful Market Monday. And it's raining in Pittsburgh. Cold rain, everyone's favorite. Let's have a glance at the pre-market tape. S&P futures are down 0.06%. NASDAQ is down 0.18%. The Dow is up 0.06%. The Russell is up 0.53%. The VIX futures are flat. Treasuries are down. Short-term bonds, mostly flat. Longer term, down a bit more. 20 years down about 0.6. 30 years down about 0.44. Gold is up 1.1%. Crude is up 1.74%. Nat gas is up 3.3%. Bitcoin is down 2.5%. The FTSE is up 0.55%. The Nikkei ended up 0.23%. Shanghai index was closed down 0.17%, and the U.S. dollar is up about 0.5% versus other currencies. Shanghai index down. What was? Didn't Chinese stocks have a big move? Yeah, they had some data release, right, in China. Let's see what happened. Shares of U.S.-listed Chinese stocks are trading higher following reports suggesting Chinese officials would embrace a moderately loose monetary policy. That's the type of policy I can get on board with. Well, that's nice. Let's see if they stick to that. So how was everyone's weekend? How's your Monday morning? Well, I mean, that sounds like a tremendous Monday morning. All right. Let's see. What do we got here? What are the big movers? SMCI. So what happened? They got an extension to file their annual report. Is that it? And they're up 8.5%. Yeah, that's kind of it's kind of obvious. But all right. Market celebrating every bit of news these days on every stock. Like Palantir. Palantir's up what? 7% or something? They're up 6% pre-market. What, because they got a $37 million contract? Or a $37 million extension of a contract? $37 million. What are they worth? I know they're at least a $20 billion company, no? At least $20 billion. They're a $184 billion company. Man, I am behind on looking at Palantir's valuation. Okay, $184 billion company. Let me make sure. I'm going to check multiple sources on that one. All right, so $184 billion company, and They are up 6% on the extension of a $37 million contract. I'm not trying to short a stock like Palantir, but that seems a bit ridiculous to me. This is not Palantir Yahoo Finance. I don't even know what principal lifetime hybrid. I don't know what that is. All right. Yeah, $184 billion. Holy crow. Is it getting old to say the markets have lost their minds? That is insane. But I guess if you're holding shares of Palantir, you're fine. Man, what a move Palantir's had. I don't know if there's anything else. Any other news on them? Was there anything, I guess, last weekend? They're partnering with Anduril. I think I saw they're partnering with, what was it? Booz Allen Hamilton, which I thought was an alcohol company at first. To advance AI for national security. Okay, that's great. Isn't that already what they were doing? All right, whatever. It's fine. Market's going to move like crazy on bits of news. What's the Dow doing? Yeah, a little bit of a move. I mean, it's pulling away from the pack, but I think we saw that Friday morning pre-market. Dow was up in pre-market. It was outperforming, and then it switched. It flipped. We'll see what happens. Pre-market, I guess, doesn't matter that much. Yeah, let's have a look at some news. So far, year to date, S&P 500 has gained over 27%. So that's just since the beginning of 2024. I believe over the past year, it's up about 31%, 32%, which is insane. NASDAQ gained 3.3% last week. So both hit record highs. Dow dropped just a tad bit last week, about 0.5%. The Workday and Apollo Global Management were added to the S&P 500. Those are on the list. The candidates for the S&P 500. It is a long list, but I think it could be narrowed down. And for people in YouTube, there's a forum in the Discord server where I go through the potential S&P 500 inclusions. Yeah, Apollo's having a really good year. Let's see, what are they at? Oh, yeah, about double in stock price. Actually, definitely more than double, yeah, as of that announcement, that inclusion. There were rumors what Robinhood could be included, which was the cherry on top for my bull thesis. That was a speculative part. It'd be interesting to see that happen, next quarter? Or 3 months from now? NVIDIA probe. China has opened an antitrust investigation into NVIDIA's 2020 Mellanox acquisition. NVIDIA shares fell 2% in pre-market trading. What are they at now? Oh, yeah, NVIDIA's down a decent amount. Looks like they're down about 3%. So I guess this is China sort of preemptively retaliating for threat of increased tariffs. I wonder how far they're going to go with that. More wait and see. TikTok. Federal Appeals Court upheld the U.S. ban on TikTok set for January 19th of next year over security concerns tied to China-based parent ByteDance. TikTok plans to appeal to the Supreme Court. Yeah, I don't think that appeal is going to get them anywhere. This one is... Yeah, this isn't something... I don't know how they can negotiate out of banning TikTok at this point. What Trump said that he would be okay with TikTok because he has friends invested in them or whatever. But I don't think it's going to hold with Congress. Unless they're all invested too. Yeah. Let's see. How did I know Meta did well Friday, right? Pretty big move for Meta. Although I feel I remember seeing Meta move previously. What was it? Year ago, year and a half? I can't remember. And it didn't really matter, or it had a preemptive move, and then I think it was based on the news that TikTok was going to be banned. They decided, okay, yes, we're going to ban it. We're going to move to ban it. And that was kind of it. So I suppose the way I see it is I don't know that traffic will, double on Meta. So, and if, whatever the increase in traffic is for Meta, what's the actual increase in revenue, ad revenue? So, yeah, I don't know. Meta's been on a tear. I mean, it's good for Meta. But, yeah, you look at the past week, it already had one hell of a move. Went from 570 to now it's at 623. Was at 630, so it already had a 10% move. Yeah, in the past week. Not that has to make sense. Omnicom is in talks to acquire Interpublic Group. Omnicom tickers OMC. Interpublic Group tickers IPG. In an all-stock deal, everyone's favorite, valued at $13 to $14 billion, creating the world's largest ad firm with over $20 billion in annual net revenue. Let's have a look. Go figure, Omnicom is down pre-market because it's all stock. How is IPG doing? Not the biggest premium, it looks like. It was trading at $29, shot up to $33. Yeah, I never liked the all stock deals. It's good for executives. Yeah, I never liked those. But I don't think we'll have any shortage of M&A over the next 4 years. So we'll see if the all cash deals are back on the table, which is something that will need to be looked into because depending on changes in regulation relating to M&A, they could make it much more favorable to do stock-based deals, which would be interesting. All right, market's open. S&P down 0.05%. NASDAQ down 0.2%. And the Dow is holding at positive 0.15%. The Russell is up 0.9%. And I think I'm going to short that. Let's see. That's a bit much, if you ask me. Okay, 240s are nice and... Yeah, let's do that. See what we get here. Oh, man. That shot down real fast. Okay. I immediately missed entry. Let's see if I can get it. I'm going to. All right. Well, I'm in. Okay. I might cut that position in half immediately. A bit slow there. Yeah, I'm going to cut it in half. Let the rest ride. Oh, look at that. Okay. All right. Well, it's already moving down. We'll see what happens. Okay. Yeah, gold is making a good move up 1.24%. The futures, that is. Oh, whoops. Just typed the ticker in Discord. Yeah, maybe we should get a little bot in Discord. Let's see. What I don't know if you guys know about the little bots that are already there. There's one, for example. Application. Okay, whatever. I'll fix that later. There's a little stock bot in the server. It doesn't look like it's working in the market talk stage, but we'll get to that later. All right. That was a pretty fast move on the Russell. I might just take that. Yeah, I won't be greedy with this. It's going to make me chase. Oh, man, this thing is moving. At least the options are. Let's see. Okay. All right. I'll take that. The Russell is. That is some movement on the Russell. Look at those candlesticks. What are these candlesticks? Like 50 cents, 40 cents wide? Yeah, just some morning volatility, I guess. All right. Well, okay. A little bit change. Didn't want to be greedy there. Okay. What else do we have in the news? The Volkswagen strike. Volkswagen workers escalated strikes at 9 German plants. Union leaders warned of unprecedented action in 2025 unless management compromises. How's the stock price holding up? What was OTC? VWAPI? Oh, it just bounced off a low. Let's see. Is it moving with Stellantis? Yeah. All right. So, what about Toyota? Oh, I got a few trades to make, speaking of. If you haven't seen the updates, have a look at the announcements channel. I didn't tag everyone there because you were going to get tagged by the stage starting anyway. I don't want to spam it. Let's share that link. Yeah, I did a good amount of work yesterday relating to content. Almost all day, to be honest. And then it took me an embarrassing amount of time to find good emojis to use for the trading channel. Oh, that's what I like spending my time on. But yeah, just to recap real quick. All right, so for the active trading channel, to try to improve clarity on the trades. As I've mentioned plenty of times, don't copy the trades. Their trade setups, they're meant to give you ideas. That said, if you're getting the trades wrong, maybe take a step back. And that's okay, because that's going to prevent you from losing money. But that said, I am trying to make it more clear as to what types of trades they are. So, for example, I'm going to, if I do a credit call spread, it's bearish, but I'm just going to denote bear credit call spread to make it obvious, right? And then you have a nice little red down arrow emoji for you, for people that like colors. And then I'm also going to denote the complexity of the trades. So for that, it's going to be easy, advanced, or expert. I could have called it beginner instead of easy, but I didn't want to trigger anyone. Reddit thinks I'm pretentious, so 1,000 pardons. So yeah, easy to make you feel better. So easy would just be single leg long options trades that are easy to enter or exit and will most likely require no adjustment. So that they're meant to just, not fire and forget, but just, put the trade on and then, one entry, one close. That's it. Long call, long put, something like that, right? Then there's advanced. That would be basic covered spreads, such as debit call spreads, credit call spreads, put spreads, covered calls, and cash secured puts that may require some adjustment, maybe a little bit, and those might be, I don't know, like a week, a couple weeks, maybe a month, maybe a couple months. And then there'd be expert. The expert, honestly, I would say take that, face value. These are trades that if you're not really comfortable with making options trades, then you shouldn't be making these trades. So these would be complex spreads that have more than two legs or multiple expirations. And also they might have return risk profiles that are difficult to predict, such as a calendar diagonal spread. Hard to tell what your potential max return is, or what, just to predict returns in general. That's more experts for those complicated spreads that are just, I think the big thing there is multiple expirations. And then just a weird way to cover risk and difficult to predict returns. So those might require numerous adjustments. So honestly, I think there are probably only a few people that would be comfortable making those trades and know how to adjust. And those are often, if I'm making those types of trades, I don't know when I'm going to close them. And I mean, I have an idea, but, say I put on a 1 month trade and I aim to close after a week and a half. After a week and a half, who knows, I might think, you know what, I'm going to extend this, or I'm going to roll this out, or I'm going to leave it open for another week. Yeah, those are so dynamic. They don't always go as planned. And sometimes you have to make numerous adjustments. So yeah, hopefully that clears up the trades, the setups, makes them easier to follow, or if you're wanting to make similar trades, gives you an idea of what trades you should or shouldn't be making. And as always, if you have questions, you just ask. You pay for the privilege, after all. The relative valuation strategy is going pretty well. Lulu was finally closed. Lulu was always the wild card, but it was closed after 7 months. If there was dollar cost averaging, strict dollar cost averaging, then you probably made anywhere from like 40 to 50%. If you closed before earnings, if you waited till after earnings, you made a solid 125%, 120, maybe 130. So Lulu that was pretty nice. 7-month duration on that one. So good job, Lulu. It was looking tumultuous for a while. And now it's at 411. So, and something I'm testing. So I think yesterday I kind of came up with the idea of just kind of testing content or testing trades, setups, stuff like that. Something I'm testing for you guys that are familiar with the relative valuation strategy. I'm seeing plenty of stocks that meet all but the strict part of the criteria, which is where a stock is trading at the low end of its valuation range. This has been, I've seen so many stocks that have just outliers throughout, the past 3 to 5 years, especially 5 years because of COVID. So I've started to look at 3 years, and I've started to look at what I think could be good points to dollar cost average into them. And that would be like long-term leap calls. So that I'm testing, and I just want to see how these stocks move. So I'm not necessarily doing a back test because, frankly, that would be pretty difficult to back test this. So we'll see. But yeah, I already marked a few stocks there in the paid channels. So yeah, I actually got to make those trades here in a minute. And yeah, speaking of new content, this is mostly for the investor tier. I started posting the equity portfolio spreadsheet updates in the investor updates channel. Those are going to be my real stock picks, as in I'm not just nibbling, I'm not just casting a net or dollar cost averaging. Those are, sizable positions. And then I'll post, returns, all that good stuff. And speaking of that, I did add a column in the spreadsheet to show whether the stock has an economic moat or not. And I'm doing it Morningstar style, which I like. And they say it has a wide or narrow economic moat, which I think that's useful. Or no economic moat at all, of course. And also for the investor tier, I'm going to be testing customizable spreadsheets, probably for one report per month. And the report that I'm going to start with is the one we're doing this week, which is on semiconductors, which I've titled Semiconductors Using the CapEx Cycle to Predict Growth. And, all for the sake of growth at a reasonable price, if not value investing. So with that one, I'm going to share a spreadsheet. And this is for the investor subscribers or premium. And the spreadsheet would be fairly straightforward, fairly simple, but I think it's pretty useful. So, and you get to customize it or whatever. You can even add stocks to it, and then change it up however you see fit. And that'll focus on kind of what I mentioned before. These reports, it's valuation. Are they growth? How about their timing? This one's going to be all about timing. And I think this was pretty interesting because a lot of people are looking at semiconductor chip stocks that have been beaten up, and they're assuming that they're just going to go back up. But I don't know that we're going to have another wave similar to the one that we had, a few years ago. So I think you're going to have to start being pretty picky. And the markets have shaken out what they believe are not, the industry leaders or the best semiconductor stocks to be in. So now that you have so many semiconductor chip stocks have been beaten up, now it's time to figure out, okay, which ones could the market be wrong on, or which ones would be in a good position. Not just for like another wave of big semiconductor chip investment, but also say if the AI trend, continues it with this momentum, with this strength, or something new comes up, you never know. So that's what that's focused on. I found it somewhat interesting, and it's a pretty long list of stocks, but only a few actually make the cut for, in my opinion. But yeah, and some of them, the markets have already sent, up. Like I think Marvel has already shot up from the recent earnings. They're already on a tear, but yeah, that was a good pick. But for example, now, well, it's riding a little bit too high. So yeah, the spreadsheet will have some good information, little columns you can you can adjust, you can customize yourself, get an idea of where the values are or where the growth is rather. And yeah, that's coming out. I'll send that out later this week, and next week will be part 2 of the renewable energy reports, that research, and this one's going to be about the non-nuclear option, which people are already talking about, but yeah. This report probably, for the subscribers, this report probably won't be as extensive as the first part. This one's, I think, far more straight to the point. But yeah. So those are all the updates for the content. And as I've mentioned before, if you have any questions, just let me know. DMs or general chat, wherever. I think we got almost I don't know, like 30 subscribers at this point. So nice. You guys got problems with the content? Let me know. I'm trying to dish out more stuff. Improve the value you're getting without making me slave away and make far less than minimum wage off of it. But yeah, hopefully it's going well. I know the active trading channel is doing well, so I don't think there are any complaints about the trades. Good morning, YouTube people. Good morning, Speedy. Yeah. It's funny. I tried to cancel a few subscriptions just so I could get back to reading, just to incentivize myself to get back to reading. But yeah, then I found a few good things. I'm not a big animated show guy, but I watched that show Pantheon on Netflix, and it's pretty damn good. I don't know if that's like, if it's anime or animated show. I'm not really sure what the big difference there is, but yeah, the show's pretty good. And I don't really like anime. All right. Back to news. Google CEO Sundar, I don't know how to say his last name, Pichai announced, probably Pichai, right? Announced significant AI-driven changes to Google Search in 2025, aiming to tackle complex queries and introduce enhanced capabilities through updates like Gemini. Have a look at what I shared in, was it due diligence or general? May have been general, because I was like, this is just interesting. Yeah, they deep mine. They got software that is just making video games. I don't know if other companies are already on this or if they've made more progress than Google, but it seems pretty cool, and it's making me get bullish on Google again. The video game development it's such a crazy industry. I mean, people don't really talk about it that much, but a lot of those companies, they're kind of the equivalent of sweatshops. And you hear some developers talk about it, and I know it doesn't sound like it. Like, well, it's not like, what are they? They're not little kids making shoes, right? But those guys, I mean, they get like obsessed about improving upon their video games, or it's just the deadlines. I mean, what, Cyberpunk? Everybody remembers that, and developers talking about just working, sleepless nights. It was a massive game, and it came out with all those bugs because they pushed it out. And the developers were still saying, like, yeah, they didn't have enough time. They weren't getting any sleep. So I think, I think Google could be onto something here. And it'd be nice with the developers, because I don't think they'd be. I don't think that's an industry that disappears necessarily, because AI, is able to replicate what employees do, or what developers do. This definitely seems like an industry where AI helps. I forgot the term that they're using, but it's like assisted AI, or I don't know. So yeah, either way, I think it's kind of interesting. speaking of Google, they filed a lawsuit against the Consumer Financial Protection Bureau, contesting the agency's decision to place Google payments under federal supervision. Google argues that their move is unwarranted, because why wouldn't they? I'm curious if that's the same for Apple, or, I mean, I assume PayPal, Square, all those other, the buy now, pay later, I assume they're ready under CFPB supervision. Because if not, then they're just, they just don't like Google. Macy's, activist investor Barrington Capital urges Macy's to form a $5 to $9 billion real estate subsidiary, divest Bloomingdale's and Blue Mercury, and cut spending to 1.5% to 2% of sales. The push includes $2 billion to $3 billion in stock buybacks as well. Let's see if they moved at all. What was that, Friday? Oh, that was this morning. The activist investors for these retail companies, I'm not sure that they actually do anything. Typically, when stocks have activist investors pushing for change in strategy, improvement in the business, profitability, what have you, typically, that if the activist investor is a big enough deal, somebody somewhat known, that can mark the beginning of a turnaround for a company. Because that's usually when they come in, right? When the stock's just getting beat up. There are myriad examples of this happening. However, with the retail space, it seems all these stocks that have had activist investors pushing for change. I know we've had Macy's, we've had Nordstrom, we've had Kohl's. I'm sure there are plenty more. It doesn't really seem to be helping. So before, I would have said, okay, good. Activist investors getting involved. That tends to correlate with improvements in the stock price going forward. But how many times have activist investors just not really helped in the retail space? So I think a company like Macy's, they're just going to have to figure it out on their own. I don't know if these that's a pretty bold move. I don't think Macy's is going to listen to them at all. Did I move those Kohl's calls yet? Those were closed. I mentioned that on, what was it? Maybe the talk that week, at the end of that week. I left some open because I felt like gambling a bit. Let's see. What are they at now? Oh, man. Yeah, those are still moving. Okay. Yeah, I still have a few. Let's see. I'm just bringing it up on my other monitor here. Yeah, I say close the rest. I mean, if you still have them, I still have a few. Yeah, it's a good time to close. Let's do that. Okay, it's gonna rob me of pennies. All right, that's fine. Yeah, and depending on what you had, you may have made more than me. I don't actually remember what I closed the first batch at. Yeah, close the spreads and the 15s. Yeah, just closed right now. So, yeah, I don't remember what I made on the initial batch. So, yeah, maybe you got out. Maybe you're getting out better than I did. The Dow, or sorry, not the Dow, Dow Incorporated, will sell a 40% stake in U.S. Gulf Coast infrastructure assets to Macquarie Asset Management for $2.4 billion, with potential proceeds of up to $3 billion if Macquarie raises its stake. The deal is set to close in first half 2025. This sounds like what I assume is good news for Dow. Yeah, markets seem to think so. It's up 2.5%. Okay. I think Dow's at an inflection point. This thing has gotten beat up. 6.5% yield. Yeah. I added Dow to my portfolio maybe a week and a half ago, something like that. Yeah, this thing, I think I mentioned it maybe on Reddit, maybe elsewhere. Everybody's talking about Pfizer as an obvious value play, the dividend, this and this and that. Based on what people were saying, the sort of I guess kind of a basic thesis, high dividend. This company isn't going anywhere. Based on that language, I said you should look at Dow. If you don't care that it's big pharma, if you don't care about the industry, if you're just you see high yield, you want to know that that dividend's safe. You want to know that that company isn't going anywhere. Yeah, Dow is to me, in terms of financials and fundamentals, I think Dow is in a significantly better position. Although they don't have Trump and RFK Jr. having lunch with their executives, so they're missing out on that big bull thesis there. And I don't know what that means for Pfizer, but yeah. And for those who don't know, Trump and RFK Jr., they had lunch with executives from Pfizer, and it sent the stock price up like a couple percent or something. But yeah, whatever that means. But I like Dow. Not the Dow. I hate the Dow, the Dow Jones. I think it's useless. Well, now they got NVIDIA, so not as useless. Plus the way it's weighted, it doesn't allow for momentum to kick in. So that's why the Dow Jones historically underperforms, because momentum, well, the S&P 500, that is essentially evidence that momentum works. But yeah, the Dow Jones doesn't enjoy that benefit because of how it's weighted. But yeah, the company Dow Incorporated, yeah, I think that's a good play there, in my humble opinion. AJG, Arthur J. Gallagher, will acquire Assured Partners for $13.5 billion to enhance its U.S. middle market property and casualty focus. The deal, funded through debt, equity, and cash, is expected to boost earnings by 10 to 12%. AJG is a stock I added to my watch just a while back, and then they proceeded to go on a tear. They've had some dips, but they are an insurance broker. They run a pretty shrewd business, and looks like they're trying to acquire growth. Yeah, the insurance broker business, that's yeah, very shrewd industry. And AJG has done a pretty damn good job. I think the podcast Business Breakdowns, if you enjoy listening to drawn out explanations of businesses without even knowing if they're worth investing in, Business Breakdowns is a great podcast. And it sounds like I'm ragging on them. In a way, I am, because I'd rather just the business be summarized, in like 15 seconds max, and let me figure out, whether they're an investment or not, or a good investment. But yeah, if you find industry breakdowns, business breakdowns interesting, then yeah, that's a good podcast for you. Andy, what's up, man? They have.
Hi, good morning.
Yeah, they have done a good job at being shrewd. Yeah, it's true. Being shrewd makes money.
Yes, as it turns out, if you deny 30% of your...
Depose. Yeah. Yeah, being shrewd pays dividends. Xiaomi, their new SUV is the YU7. It's coming out in June or July of 2025. Xiaomi's the Chinese EV manufacturer. The move underscores Xiaomi's continued push into the EV market.
Is
It's doing
Chinese
well.
stocks still pretty scary to be in right
A
now?
little bit less
Just
scary
because
this
of
morning. I mean, they're going to be
what
volatile.
happened this morning?
Chinese government said they're going to be a little bit more. They're going to implement more loose monetary policy, which I, of
Oh,
course, gave my stamp of approval. That's why they're doing it. It has my name on it. But
yes.
yeah, I mean, it's going to be volatile. Who knows with China, man? Yeah, but the EV stocks are still looking good. AI related stocks are. I keep seeing news and articles about guys coming out from China, not like coming out of the closet, not that there'd be anything wrong with that, but essentially saying the U.S. is not ahead with AI. And a lot of it is like, yeah, okay, China, that's just Chinese propaganda. But a lot of these guys are like, they seem like somewhat neutral scientists, so I'm like, okay, maybe they're doing pretty damn well. Not as in like everybody panic, China's ahead of the U.S. in terms of AI, but more so like, okay, maybe there are some companies worth investing in because maybe they have some really interesting technology. And maybe they'll get some of the tailwinds that Western based AI companies have enjoyed. So I would say if you're looking at China, stay away from the distressed companies. I don't think it's still. I think it's not safe yet. The big companies, Alibaba, Baidu, those companies, JD.com. Yeah, those should be fine. I just don't know that they're just gonna, like those stock prices they'll just behave normally, like everything's fine in the Chinese economy. I think you're gonna need some secular trends there and some pretty strong tailwinds to outperform. So it is kind of like I do still see investing in China as sort of like investing on hard mode. And some people have asked me what I think about European stocks. It's kind of similar, not the risks, but I see looking at foreign stocks right now, it's like you're investing on hard mode. And you might be right. You might find good values and you might make decent money, but I'm willing to bet that even if you're right, you fast forward like a year from now, I don't know that you would outperform either the S&P or a comparable industry with stocks that are based in the U.S. Like AI stocks, for example, in China or in Europe, or aerospace and defense in Europe, right? I don't know that even if you're right about their value, I don't know that you're going to outperform U.S. stocks. So I'm kind of sticking to the U.S. Frankly, it feels like easy mode right now. And I like easy mode. Any good site or Google Sheet for watch list tracking? I mean, I made my own watch list. I guess honestly, there are several good sites that are all free, like Finviz, Ticker.com. I know Ticker you have to sign up for an account, but you don't have to pay. If you're savvy about making spreadsheets, Google makes it pretty easy. I'm honestly I'm pretty sure you could just Google a Google spreadsheet related to stocks and you could probably just download one. People probably shared them on Reddit. Yeah, I have mine, but it's very complicated, and I mentioned this before. If I shared it, you guys would have a million questions, and yeah, I think at that point it would just be faster for you to make your own. Um, but also it took me, man, I spent a lot of time on that thing, and I'm talking dozens of hours, like making it. Over the past 3 years, I've improved it, I've made it more efficient, all sorts of things. So yeah, I'd have to charge you. I'd have to take ownership of your firstborn for that spreadsheet. But yeah,
If I never have a firstborn, do I get it for free then? Is that how it works?
I'll take half of your net worth. because that's about how much a child is worth. But yeah, FinViz, Ticker. I think those are kind of my go-to for watch lists. I don't know if you could save watch lists on FinViz, but you can create a watch list and then like bookmark it or save it somewhere.
Also, Ticker only lets you have one watch list if you have a free account.
True.
So.
Yeah, very true. Yeah, you got to be picky with Ticker.
With Webull, the desktop app, you can like make multiple watch lists, and it's kind of strange, but it works.
Yeah. Okay. Let's see. Just a few more headlines. The Consumer Financial Protection Bureau (CFPB) has sued Comerica. Wasn't Comerica just added to the S&P, alleging it mishandled the Direct Express federal benefits program, disconnecting over 24 million calls and improperly charging 1 million cardholders ATM fees. So that's how they did so well to make it to the S&P 500. They swindled their customers. I'm pretty sure they did. I could be wrong. So yeah, there's alleged mistreatment of disabled and elderly customers. Yeah, that's not good.
Love to hear it.
Yeah. Don't take advantage of the elderly, disabled people. Take advantage of young, disabled people.
And veterans.
Yeah, and veterans. Yeah, like such as myself. Take advantage of me, please. In random news, I don't know why this is here. I'll read it. Apple topped the management top 250 list for 2024, highlighting financial strength with record services revenue. Fantastic. As if Apple needed more awards and recognition. MasterCard surged to 5th due to innovation. I haven't heard of MasterCard's innovation, frankly. While NVIDIA and Microsoft also ranked in the top 4. Fantastic. Not sure what to do with that news there, but it's there. And there are a whole bunch of other political things that happen that, frankly, nobody really cares about, right? Assad.
Oh, yes. The coup takeover.
Yeah. YouTube land. You're talking about the video games. Yeah, video game development. Yeah, they would push those early access games. Well, frankly, I think it's funny is when you think about it, that's what every software company does these days. Like, period. Because they're all trying to meet deadlines. Even think of like phone, companies like Apple. They're pushing out the next iOS, and there are all these bugs. That wasn't always the case. You didn't have a million bugs, every release, and it's because they're pushing out the beta version. So yeah, video games have definitely been doing that for a while. However, I do respect Nintendo for, at least as it relates to their games, right? Not the third-party games. They're pretty damn good about making sure their games are ready for launch. And they'll even extend, they'll delay the release of the game to make sure. Blizzard was always good about that. And Bethesda used to be good about that. But I think of all the developers I could think of, I think Blizzard and Nintendo, they were definitely the best. You were like glad if they delayed the game because you knew that meant it was going to come out like perfect. We got some scammers trying to join the server. Well done. Good job destroying them, 405. Morningstar, are you talking about having a watch list? Oh, yeah. Morningstar, if you're a student, I'm pretty sure, I don't know, maybe like every single university will give you access to Morningstar. You could try Value Line too. A lot of people don't know about Value Line, but Value Line, they give free quarterly analysis on the 30 stocks in the Dow Jones. So yeah, and you might get access through a university if you're a student. New relative valuation plays. I mentioned them briefly, but yeah, I think I'm just sort of testing the addition of or changes to content here and there. So like one of the things that I was thinking about is say there's a slow month. Like when it comes to trading, there's no quota for trades, right? I'm not going to tell you guys that are subscribed, oh, you're going to get 30 trades a month. There's no, that's a bit scammy, to be honest. If I see trades, if I see potential for trades, I'll share them. If not, I'm not going to push it because that's just not good. So if there is a month where it's slow and I'm like, look, I don't really see any trades, or like maybe, hey, the first month kind of knocked it out of the park. Maybe it's a good time to slow down. A little bit of want to avoid a hot hand, right? So because of that, I might look for other ways to like add value for that month instead of you. Maybe if you're just paying, say, for like the trader, just the active trading channel, you're like, well, what's the point of being subscribed this month if you're not going to give me a bunch of trades, a bunch of trade setups? Then I'll make it worth it in a different regard. So that's the kind of stuff I'm starting to test out. Like, what else can we do there? So that's all the changes to the relative valuation or potential changes to it. But yeah, just kind of test this stuff out here and there. And I'm probably going to do it for both tiers just to kind of, I guess, like make it fair, you know. But also, I think it kind of keeps things interesting. So yeah, relative valuation potentially there would be a way to get on those trades sooner and to miss fewer trades, right? But I would still want to emphasize risk. So in other words, if it looks like it's working, I'm not going to give it the gold stamp and say this is relative valuation worthy, because frankly that strategy has been killing it. So I know that if I mark a stock for the relative valuation strategy, for those of you that we'll say believe in it, for those of you that believe in it, you're immediately looking at that stock. So I don't want to give that impression for what I'm testing. So that's why I'm like, okay, this is just a test. So to make that clear distinction, yeah, these don't have the gold star on them yet. But that's the kind of thing I'm thinking about in terms of just kind of testing out either changes to content, new content, whatever. So that's what it is for now for the trader tier. For the investor tier, it's in case you missed it earlier, I'm going to provide custom spreadsheets. I'm going to test it out, but providing like custom spreadsheets for one report a month. And they're probably all going to be different, and they're going to be based on that particular report. So for this week, it's going to be about semiconductors. So yeah. So that, you're going to be able to customize it. You're going to be able to, sort by whatever you want. You can add stocks if you want. It is going to have a bit of my own input on it, but I'm making it to where a majority of the inputs are just formulas based on like price, values, and stuff like that. So if you do add stocks to it, you're not missing a ton of information. If you want my input on it, then that's another thing, right? But yeah, you can still add stocks to it. You can kind of use it as frankly, the one I'm working on right now, it's a pretty basic spreadsheet that you could use across the board. And then the inputs that I'm adding, well, that's based on my own analysis and that I've actually, taken some time to get together. So, but yeah, so those customizable spreadsheets, I'm going to see how that works. One of the big things is I don't want to start sharing spreadsheets and then people have a million questions, because I don't mind like addressing them, say like on a weekly basis. Everybody has similar questions, whatever. I don't mind. That's not a big deal. But if everybody starts reaching out with questions and all sorts of stuff, that's going to make me feel like I have to charge separately for the spreadsheets because that's going to take a lot of my time. So I don't necessarily want to add something else that I get to charge for. So I'd rather just make it fairly simple but still useful. Now you're a student that never graduated. Welcome, Van Wilder. Refinitiv icon like Bloomberg for less sophisticated folks. Nice. Yeah, ticker is like a Bloomberg light. Going to FOMO and CVS calls reading the chat over the weekend. Very nice. All right. What do we got today? Some things I was looking at yesterday are already moving. Interesting. How's SMCI doing? Oh, wow. It's only at 3% now. Okay. Yeah, I would give it 3% on the delaying or getting an extension. Yeah, three. Yeah, with 3 to 4%. That's what I would have given it. It was up like what, 12% or something, 15 last night. Yeah, I don't think so. Man, it sucks if you FOMO bought into that, unless you're one of those super microcomputer lifers, cultists. Yeah, it's literally SMCI. It could go up, it could go down. That is quite literally the play on SMCI. I'm betting that it's going to go down, because that's a lot of money if I'm right. I don't know how much money you can make if they're cleared or whatever. I don't know that it'll shoot back up to 100, or if it goes to like 60, and then they're like, oh wait, it's not that big of a deal, and you lost some customers. No idea. But I do know what happens if they do find fraud. So, yeah. What's amazing is, I think, say, before retail trader mania, so what was that, before 2020, 2021? If you had a company like this, that stock price was just dropping. There was no bouncing at, what bounced at looks like $17.25. No, that thing was just going down. And interestingly and ironically, what you would have then is you would have something of a, I've used the term before on Reddit, and then people thought I was, I don't know, pontificating. But that's another word that Redditors might not understand. But you end up with the bimodal distribution, bimodal outcomes for a stock. And all that means is that markets are, they're saying we only see two different fates for this company. It's either they are delisted, potentially go bankrupt, whatever, or the stock price goes towards zero, or the stock price goes to, towards the moon. SMCI's case, it's either they are found guilty of fraud, or they're not, or they're cleared and they're good to go. And ideally in that scenario, they didn't lose too many customers, right? So that would be a bimodal outcome. Now, what tends to happen is you have the markets will themselves assign sort of a probability to each outcome. The way they do that is, well, it's based on the options pricing. So back in the day, you would have, say, the stock price just going down. Market's just selling the hell out of the stock, just going down. A little bit of good news comes out here and there. You have a little bit of bounce, and it goes right back down, right? In those days, SMCI would probably be single digits, and I don't think I'm embellishing there. What happens at that point? Say if I were looking at SMCI and it was single digits, all considered, I would think of that bimodal outcome, that distribution. And I would think similarly to how the brownfield fund guys in The Big Short thought. When the markets are betting essentially one direction, I'm going to consider betting the other way. Because what happens then is that outcome is now fully priced in and then some. So if you want to bet on the stock, SMCI getting delisted at that point, you're going to pay up for that bet. It's going to cost a lot of money. If the markets are basically in full agreement, almost full consensus, almost unanimously agreed that the stock is going down, that means calls are going to be pretty cheap. Or relatively speaking, calls are going to be cheap. So then it's up to you to figure out, okay, if the markets are pricing in, say, 95% chance that the stock is going to zero, maybe I think there's a 20% chance that it doesn't. For, good reasons, not because Reddit told me so. So that's kind of what the brownfield fund guys in The Big Short did. Or, well, in real life, not just in the movie. So, yeah, it's about finding those perhaps incorrect probabilities that the markets are assigning to two different outcomes for a particular company. But the reason why I say it's ironic is because I would have considered taking a bullish play back in the day on a stock like SMCI. All right, fully priced in that they're going to zero, or perhaps damn near priced in that they're going to zero. It's really expensive to continue short them. Markets say there's a 5% chance that they don't get delisted. Okay, maybe there's a greater than 5% chance. Maybe I want to take the opposite bet, and maybe it's relatively cheap to do so. And I'm going to keep looking for plays just like that one. Not necessarily the same exact situation, right? Because that's still pretty risky to bet against likely fraud, right? But case in point, the price, the probabilities that are reflected by the options pricing, which is what the markets have implied, that's going to guide my decision on whether to bet up or bet down. Right now, I think they've already mostly priced in not being delisted, which is still, that's definitely still, it's a possibility. Yeah. I don't know what the percentage odds are, but I'm willing to bet that the markets have overestimated that probability. So that's why I short SMCI. But if SMCI was trading like $5 a share, I'd probably be betting the other direction. So it often, and I've mentioned, we've talked about SMCI several times here. And I know some people think I hate SMCI. I want them to go down. Well, frankly, if they're committing fraud, I do hate fraud. But it's not personal. It's based on probabilities, purely based on probabilities. That would be interesting if SMCI was trading single digits. That would be very interesting. And not even gonna lie, when it went down to 17, I was wondering what the cost of buying some random calls, expiring 3 months from now was. I was looking at them and wondering. I thought about what I just mentioned. Like, I thought about the probabilities. And then it felt like at around 17, it felt too much like a 50-50. Or not really like a 50-50, but like as in are they good to go? Did they not commit fraud? It still felt like too much of a gamble. But, again, if the stock got traded down to single digits, yeah, I would have started to feel a little bit more I would have found the idea of making a bullish play a little bit more appealing. So I think what you have now is people have really jumped the gun in terms of making a contrarian play on SMCI. Speaking of crazy movement, Palantir was up. Wait, it was just up 6%, and now it's down. Oh, man. What a market. Oh, and I think everything. There was something else that I was going to share, but actually, I might still share it. Okay, I'll probably share it. I don't know, maybe at the end of this week. I don't want to. I don't want to spam the tagging everyone or anything like that. But and this it does relate to relative valuation, but it's more for just tracking performance. So what I like to show is, as some of you have seen, for relative valuation, there have been times where the stock prices really moved up pretty quickly, and you were able to take gains off the table. Bless you, Andy. Thank you for burping on my live YouTube stream again. But
I apologize. A hiccup. I'm sorry.
Oh, okay. Hiccups are acceptable. But yeah, there have been times, like good times, to take gains off the table. Not necessarily that those stocks they're now disqualified from relative valuation, but frankly, I know Nike. You were able to take at least 80% gains at one point. I think King D took 100%. A few others you were able to get at 80%. So I'm like, if you see those gains, yeah, you should definitely take them. I'm not tracking them in terms of, when I share. Eventually, I'll share like the performance of the relative valuation strategy. I'll share it with everyone, whether you're subscribed or not, at some point. Just so you can see, so you see proof that it actually works. But I'm not going to say like always get out at X%, because the whole point is to ride momentum once those stocks evidence that mean reversion has been triggered. So in other words, 80% might only be half. If you got out at 80% on Starbucks, you would have missed out on over 300% gains. So. And what was that? That was like 5 months or something. So yeah, the point isn't to just get out right away. The point is to take some gains off the table if there's a surprise movement in the stock price, based on the idea that it might actually move back down. And that's literally happened for several of the stocks. So I am going to add a column that shows what your estimated max return would have been at some point during the duration of the trade. And it's not necessarily to show like, it's not to give FOMO. It's just to show that you don't have to, you can be very passive and just go really long term and not worry about interim stock price movements. But this part, I'll leave it up to you. You don't have to stay in the trade. You don't have to cash out at a very specific time, whatever. If you see big gains, take them if you want. So the whole point of that is I'm not trying to tell you guys enter right now and exit when I say like, no, I don't want to do that. If you want to take gains, go for it. If you made 80% in like 2 weeks, hot damn. Don't be so greedy. But yeah. Because who knows, we might go right back into another bear market, and then you guys are missing these, like 3-month 50% gains that these days you guys are like 3 months to make 50%. Oh, like kind of sad about them. I'm like, holy hell, man! Like, I'm not even half as old as Buffett. I'm like, wait, almost like a third his age, and even I'm like, good God, like you guys aren't impressed with 50% in 3 months. So yeah, don't be afraid to take gains. Don't wait on me to say like now's the time, whatever. I will let you know when I'm out, but yeah, the choice is yours. Damn, you hit Nike. You hit both Nike and CVS twice, or you hit Nike once and then CVS twice. 10 years back at 4.2%, 420, nice. Trump's comments put a floor on that. So is it bouncing up now, or Treasury's going back down? Oh, Palantir. Oh, man. See, this is a frothy market. Palantir hit 82.70 pre-market. Now it's down at 75.25. Pretty hard to make trades on stuff like I mentioned earlier. I mean, hell, if you heard what I mentioned at market open, or I think maybe I think I mentioned it before market open, right? Maybe you thought, okay, I'm going to short this because why is a $184 billion company moving up 6% on the extension of a $39 million contract? That is peanuts. Yeah, you could have made good money, but you just never know with these markets. Why did it move up that much in the first place? I am trading Palantir, but not a straight. I guess at this point I'm neutral. I agree with Ben's logic on selling. Peanuts. All right. Oh, I don't want to neglect YouTube land. Okay, YouTube land is nice and quiet. Speaking of YouTube land, I try not to let the YouTube streams go on for too long. So to YouTube world, I'll call it a day. Before I leave, go ahead and read the tape real quick. Let's see. S&P has been moving down a bit this whole time. Might just make a play there. Let's see what we got. I think I already had some options. Yeah, I did. We're at 606.31. Let's do some. What time is it? 10:30. I might nibble. Let's nibble. Okay. Let's just buy a few. I'd rather see it as a nice round number. So 606 on the dot would be great. SPY's at 606.23 now. Okay, let's see. All right, nothing crazy. Or nothing crazy for me, rather. To some of you, 100 calls is 100 zero DT calls is a little crazy. But all right, let's look at the tape, and we'll sign off from YouTube. S&P futures is down 0.29%. NASDAQ's down 0.5%. The Dow is flat. The Russell is down 0.29%. Oh, I should have hung on to those Russell puts. The VIX is up. VIX futures, rather, are up 1.36%. Treasury is about the same. Longer term, still down. Gold is gradually going upstairs, up 1.3%. Crude is up 2.35%. Nat gas is up 2.9%. Bitcoin is down 4% now. And the dollar is up 0.5% versus other currencies. All right. to YouTube people, farewell. We'll see you Friday. If you want to stay in the party, feel free to join the Discord server. The link's in the About section on my channel.